I'm in Florida for NAREIT's 2019 ESG Forum. Joining me today is Will Teichman, Vice President Business Operations with Kimco Realty Corporation. Will, thanks so much for joining us.
It's great to be here.
Now, here at this year's ESG Forum, you were on a panel focused on sustainability through green leases. For a real estate company exploring green lease options, where should they get started?
That's a great question. It all probably starts with defining, what a green lease is, and I think for a lot of organizations, they struggle with just getting their arms around what the meaning of a green lease is. I like to think of a green lease as a greener contract with your tenant. And what I mean by that is specific provisions in that document that help to move the ball forward with respect to sustainability and sustainable investments. So when we started down the road of doing green leasing at Kimco, we really took a pragmatic approach to the program. So we really are seeking to incrementally improve our form lease as opposed to tearing it up and starting all over. So we really have focused in on specific provisions in that form lease that really unlock value for us in our portfolio and allow us to pursue specific programs, typically on the operations side of the house, that help make our portfolio more sustainable.
Now, for Kimco, how has the use of these green leases not only helped your sustainability efforts, but also helped the bottom line?
Sure. I'll give you two tactical and tangible examples of that. The first is our fixed CAM initiative. So one of the issues that commonly arises in triple net leases is what's dubbed the split incentive issue. Essentially, one of the two parties, landlord or tenant, is responsible for capital investment costs that would result in energy efficiency gains. And then the other party is actually receiving the benefit of those investments in the form of lower utility costs. It's a classic conundrum that happens in retail and other types of building sectors. Our fixed CAM initiative really is designed to close that gap by creating a structure for common area maintenance expenses where tenants have a fixed guaranteed cost year over year in terms of what they'll pay us. And in exchange for that fixed guaranteed cost, we have a guaranteed stream of revenues that we can use to offset investments in the common area. So we have about 25% of our tenants at this point that have been converted to fixed CAM. We're seeing improved recovery rates, and it's really unlocking ability for us to make investments in things like high efficiency lighting in our common areas with environmental benefits and obviously bottom line benefits in terms of lower operating expenses. The other real tactical and tangible example that I'll give you is tenant submetering. So a couple of years ago, we did a survey of our properties and identified over 350 properties within the portfolio where tenants are participating in shared utility metering. That can be a problem in multi-tenant facilities because oftentimes tenants are billed in ways that they don't really understand. Oftentimes, if they're not necessarily being billed based on actual utility consumption, the incentive may not be there for them to save themselves. And it also creates a lot of collections headaches, frankly, on the billing and administration side. So we have made a commitment, and we're just wrapping up, I'm proud to say, a multi-year, multi-million-dollar investment in submetering over 4,500 tenant spaces within our portfolio. At the end of that project, which we anticipate will conclude the first quarter of this year, we will have submetered all of those spaces, and those tenants will be billed on actual consumption. So that aligns their incentive to save, and it also creates a significant benefit to us in terms of reduced collection costs. So it's a win-win situation.
Now, Kimco's often been recognized for having one of the broadest and most sophisticated ESG programs in the real estate industry. Now, I'm going to put you on the spot a little bit. If you had to narrow all of that work down to one project or initiative that you're especially proud of, what would it be?
Maybe I can turn that question on its head a little bit and answer it maybe in a slightly different way than you're expecting. And what I would say that I'm most proud of is really the way that our team has tackled these ESG issues. So it's not so much a specific project or initiative. We certainly have had a lot of great things that have happened over the last 8 to 10 years. The thing that I'm most proud of is the way that we have really approached sustainability from a staffing and organizational perspective. I think what you find in many companies that are first getting started is they find the need to create a group of people and give somebody the title of sustainability and say, go take care of sustainability for our company. We started off that way as well, but what I'm most proud of is now we really don't have a formal sustainability group anymore. The responsibilities related to environmental performance, social performance, governance performance have really been absorbed into the normal groups within the company that would be responsible for their respective areas. So in some ways, the absence of a formal sustainability team, I think, is a real indication of the level of maturity of our program, and it's one of the things that I'm most proud of.
Now, lastly, Kimco was also recently named a Great Place to Work certified company. What does that recognition signify to you, and how does that help the company going about either retaining or attracting top talent?
Sure. Well, I mean, I think I said to you maybe last year or the year before when we had a chance to sit down that we really feel that social is the sort of the elephant in the room. It's the unaddressed issue within ESG that most REITs are grappling with. I think a lot of companies are struggling with trying to find what the business case is for social. And we really have focused in initially on our employee base. It's an obvious social impact area where we have a vested interest in ensuring that our employees are satisfied, engaged, and motivated to do the great things that our company is involved in doing across the United States. So Great Places to Work is really, I think, a capstone in some ways, reflective of a lot of groundwork that a lot of people within Kimco have been doing over the last several years to really beef up our programs in the area of employees. Some of the initiatives that we focused on are employee wellness, employee education and talent development, and benefits, a whole laundry list of different areas. Our HR team has really taken the lead on that effort within Kimco. They've done a phenomenal job, and I think the attainment of that recognition really is indicative of long hours of work and a lot of effort that's gone into it. And the one thing that I would say that probably makes me most proud about that accomplishment and that designation that we attained is that a big part of earning that badge for our company is a survey of our employees. So it's not just a questionnaire that someone in our corporate team is filling out, saying that we're doing a good job. It's actually validated by a survey of all of our employees. So it really speaks to the fact that I think the entirety of the organization believes that Kimco is a great place to work.
Well, thank you so much for joining us.
Thank you.
For more on this and other ESG-related topics, be sure to visit NAREIT's website, REIT.com.